What's up, Outliers? Happy Monday. The market a little bit mellow today. I think the 0 DTEs performed a little subpar for what I wanted. However, there is a little bit of confirmation on a couple new vol indicators that I'm using to help me adjust sizing and stuff, and it literally worked perfect today. It told me today was a caution day for the strategy, and it was exactly that. So actually pretty cool to see that. But that all aside, we have to talk about the market, see what's going on, and let's dig right in. So in the newsletter, I already talked a little bit about what's coming out for the week ahead. So I'm not going to repeat that exercise. I do want to talk to you about a few individual tickers. Specifically, if we take a poke over to UPS, UPS popped up on a handful of scans for me. I'll tell you which ones specifically. Give me a sec. Tesla was on vol over OI multiple times for several, like a couple, like 4,000% changes. Pfizer was also on here. Target, SoFi. So we'll talk about those as well. Option premium is really dominated by Tesla. I don't need the 1-year performance stuff. We will take a look at the J pattern a little bit later. Let's take a look inside UPS now. So they are reporting earnings coming up. They have them on the 29th before the market. So we'll see what they end up performing as. If we take a look inside their options chain on the day, you'll see kind of a moderate day for them, and it was a fair even split. I was actually slightly surprised to see the small edge on the call side of things, simply because I expect UPS to be a pretty big holding for different, more, I don't want to call it like moderate funds, but less speculative funds, things that are kind of just tracking beta. And so I would expect a little more hedging activity coming into their earnings, but not so much the case. If we take a look right now, they're showing 6.392 for the expected move. That's the market maker move. This one is, is it? Yeah, this one's removed from our earnings plays. It was for a couple different reasons. I was going to take a look at what the moves were, but this one got cut off the list. This is what we were doing with the pro workshop yesterday, was just prepping for earnings. And this one got cut, but this one's showing 6.392. So, I mean, a fair move. Let's take a look at the actual prior earnings. Where did that go? Why is that not here? Did they get rid of that? That would be so annoying if they did. Hold on. I think they did. Am I tripping right now? I think they got rid of it. Oh, that's frustrating AF. What the devastation. So if any of you have Thinkorswim, can one of you pop on and see if under the Analyze tab, if earnings is in there? Because that looks like super gone. I don't see it on anything. That's super frustrating. I hope they didn't get rid of that. Maybe it's just a pending update or something. Hopefully my stuff's just jacked up. If they got rid of that, that would be really frustrating. But we'll use ORATs because theirs is working. And if you take a look at its prior earnings, it's been a bit of a shotgun blast. It's been at the end of the ranges pretty much most of the recent history. And it's been suffering some downside moves that are like pretty outsized. So right now it's plotting 6.9% implied. So we'll see what the actual is. That's actually a decent edge over the actual move, but I still think it might be insufficient. The way that I'm screening for earnings plays this time is actually, Tommy says, I have earnings in Analyze tab. What the hell? Where's mine? Yo, they did me dirty. I might have to like reset my thing or whatever. Well, it's at least good that they didn't get rid of it because that's a super useful tab. So thank you for confirming, Tommy. But sucks for me because I don't see it. Whatevs. So that's coming up for earnings. We also should talk about NVIDIA, I think, because NVIDIA was like the talk of the town today. There's a bunch of stuff going on in there. We can see that it popped up on like 3 or 4 different option scans that I run. And if we take a look inside, take a look at this. For the volume on the day, 1.2 million calls against 1.16 million on the put side, and it's bearish. It's like real bearish in disposition, right? 44% at the bid on the calls and 42% at the offer on the puts. So, and this is all, take a look at this. This is all short term. So this to me looks like some sort of sympathetic positioning to either another earnings release coming out this week that market is thinking this is going to move sympathetically with, or there might be some sort of news coming out. But let's see really quick. New AI chip for Huawei. Let's see what this says. Microsoft, Meta, Apple. Yeah, I just want to see what it talks about with NVIDIA. Here we go. Shares fell on a report that Huawei Technologies developed new chip called the Ascend 910D, hoping it would be more powerful than the H100. I mean, this is a pretty sad down move if that's the case, right? So the market moving like this on that news tells you exactly what it is. But I mean, more broadly, this just is in a very, very clear descending pattern at the moment. And my broader expectation here, though, is like that's actually like pretty strong positioning that you see today. So I don't think that that's especially what makes me say that is because it's also short term, right? If we take a look at where most of the expirations being traded on this call volume is, it's very, very short term. So that tells us that there is absolutely speculation going on in this front expiration, which otherwise is quiet for NVIDIA, right? So 661,000 call volume, 582,000 put volume just for a few days from now, which is quite anomalous for NVIDIA outside of some sort of earnings event. Earnings event, different story for sure, but that's not what they have. So let's take a look at NVIDIA a little deeper here. And let's see. Yeah, look at this. So it's a massive spike in bearish side put premium. And take a look at this. Like all of the high volume contracts are super short term. It's all 3 days. All of the high volume contracts are literally super, super, super short term. So, I mean, that leads me to believe that they're positioning for something. Now, the fact that it's so even split between calls and puts makes it a little more difficult, I think, to discreetly identify what the event is and when. But this has been just an interesting watch, something to put on your radar. For me, I'll kind of make a post about it in the Discord for the Pro members, because there's a couple ways I think you can go about it, but this is something I would look to trade. The main thing at a Cliff Notes version is I think the direction. I think there's going to be a directional move based on the options positioning here. And if there is that directional move that I broadly would anticipate, my guess is that there would be a really short-term opportunity for it. I don't think it's going to be significantly long-term because of how short-term these options are and when they're going to roll off. But even those options, they're going to have an impact on literally dealer positioning in order to hold the positions, right? So that activity that you saw today is absolutely going to have an impact on total gamma on Charm and Vanna. Really, Charm is going to matter more in this instance than Vanna because of how short term these options are. But yeah, I mean, what is this, the 110s? So this thing can go haywire. It's just a ton. Now they call and put gamma about balances out here. There's not like a massive imbalance, but just outside the money to the north, it does, which would be surprising. That's not the direction I honestly would expect it to go. I have no idea which way it's going to go, but based on the fairly bearish positioning today, it would lead me to believe stronger potential for downside. One of the ways we can validate that is by looking at the vol surface. Yeah. Yeah. I mean, that pretty much tells the whole story. Interesting moves in NVIDIA. Another one worth talking about is Micron. Micron popped up today, similar slew of reasons, overall trading activity, but this one was slightly different in two different ways, and I'll show you how. The first, take a look at the expirations. Again, more tech. So this is another high tech facing company that doesn't itself have earnings coming up this week, but you will see a lot of very near term options being traded in it. So again, it's this sympathetic move that is being expected to hit, from what I can tell, the broad tech industry. It does seem to lean a little more to the chip side of the world. But this one was interesting because there was a couple pretty big positions that stuck out to me. So MU, let's go to today here. Make sure everything else is turned off. So there's a series of puts that came in at the bid. And then, I mean, the majority of this volume, though, that we saw in the front expiration, these are further out in time, like these bigger trades, but more of the front expiration itself, not the same sizing going on. So what I thought was slightly interesting about Micron is that the trading activity that I saw in here seemed to lend itself more so to longer term positioning. Now, the volume in the near term contracts is high in a total amount of volume, but it's much lower in total amount of premium being traded. So that's a natural skew that will happen when you're tracking options activity like this, because if you just use volume, it can be really misleading, right? Because if you have an option that's $1 versus an option that's 10 cents, but you buy one of each, complete size disparity in terms of premium, but as soon as you buy 10 of the 10 cents, now they look the same, although they're essentially the same value. So quite prone. That's why using things like open interest as a normalizer is really productive. And then the same thing is tracking by premiums. I also think that that's fairly productive. Futures on the open here are a little soft, but not bad. We also should talk about VIX. VIX is at one of its lowest levels since essentially the spike that we got here back at the beginning of the month. But again, it's still really elevated. And I want to make sure that that point is clear. A lot of people, they look at the move up to 60, they see the move down into the mid 20s, and they think, oh, wow, VIX is low now. And by all accounts, it is not. And I'll show you. This is now looking out at a 5-year weekly. What do you notice about the price level for VIX here? I mean, it literally is over the majority of the occurrences on this chart. So if I extend this to the left, it is a really big disparity. So that's important to note, because don't get caught up in this near-term transition there still is really high level clustering. It's been clustering above 25 essentially for like a month. So the fact that it even had as soft of a day it did today, but didn't actually go down lower is, again, I think quite telling. Now, another thing that I do like to do is poke through VIX and see if there are big trades that came through relative to other periods. Let's see. Not really. So if we look over the last 30 days, I'll show you. When we see like bigger size trades in VIX, it's like definitely north of, I would call it 20 mil is when it's like a big trade. So if we look over the last month, I'm just trying to give you a little bit of context on this. So you'll see that there's a bunch that are in single digit millions. It's kind of standard for something like VIX that's traded as heavy as it is. So then when we go to today and you see the largest trades are like 5 mil, obviously big gross number of dollars, but relative to VIX, what it trades, it's really not that much. So this qualifies actually as a pretty quiet period for VIX. So the fact that it had this quiet of a period and still didn't fall down lower is worth noting. So what that tells us is the market is absolutely still on edge, as in my opinion, it absolutely should be. There is no reason right now for the market to be calm, complacent, not on edge. And it's because I was posting about this in the Discord a little bit last night, and the conversations between US and China are fucking bizarre when it comes to tariffs, because the US is trying to position it as if like these conversations are going well. China's sitting there like, bitch, we didn't even talk. So it's like this just absolutely weird series of positioning, and it's actually getting difficult to discern from a back-end perspective like what's actually happening, because there's some really, really high tariffs that are set to launch. And I think with those tariffs in place, depending on how long they stay in place for, I mean, it can literally be absolutely destructive on a global scale. So this is a game of chicken. We are trying to see who's going to blink first, but it's hard to tell who's blinking when, because of the way that I don't feel like I can trust what the US is saying. I don't feel like I could trust what China is saying. So then I'm kind of like, I have no fucking idea how these conversations are going. Now, taking that back to markets, I do believe that the markets tend to be pretty damn smart, way smarter than I'll ever be. And I can see artifacts in the broader positioning that the market is obviously still registering a significant amount of volatility. Again, for context, if we look over the last 5 years, the average price best fit is about 15.5. We're 10 points higher than that. That's a massive difference. So even though VIX is coming down, the VIX is not low enough, and it's still absolutely elevated here. So cliff notes for all of that is don't let this deceive you, because it can be deceptive. I've seen it literally. There was a person that was messaging me earlier asking, one of my friends, asking about VIX and asking why it was quote unquote so low. And this, obviously, you know my response to that. It's not. It's relatively quite high. Mateo says, would you show a bit more in depth how you use the software in unusual whales and what's important to keep an eye on? Well, I think that really is super dependent on what you're doing as a trader, like what matters versus what doesn't matter. Now, for somebody like me, I use a lot of stuff. I use options as a way to view everything. So there's never a point in time where, let's say, for example, Tesla. Tesla is a great example because of where it's at. My personal opinion on Tesla is longer term bullish, near term, really I have no idea. And I think it's a little bit oversold, but I do think that the valuation here isn't crazy. I think it actually kind of makes sense. So when I'm analyzing something like Tesla, I have my baked in qualitative ideas based on just the overall amount of information that I ingest from across places. But then when I'm trying to figure out the behavior or potential positioning or movements to come up with different trade ideas, that's when different tools specifically offered by Unusual Whales, which full disclosure, I am an affiliate for. They don't sponsor any of the videos. I don't ask them to. I just use their tool where I think it naturally fits into my process because it genuinely does. That's one of the tools I actually like. And the reason why I say that is because some of the other tools that I'm an affiliate for, one of which like ORATs, I like that tool a lot as well, but a lot of what it provides, there are things that I already do for myself, meaning like my own data set and stuff like that. Whereas Unusual Whales is actually doing stuff that I don't do for myself. So it is one of the few providers of net new information for me. So the stuff that I use in there is kind of what you're used to seeing me poke through, which is I like the flow feed a lot because it gives me a ton of information regarding positioning for individual names. This is how you can spot different trades over different time frames. For anybody that's been following along on the GME series that I've been doing for GameStop and Roaring Kitty, this is literally how we dissected straight up all of his trades, is by using tools like this to understand broader positioning. I do like to use these two other tools for slightly different reasons. The NetFlow just ties in a couple broader things that we're looking at. So, for example, UPS, like we were looking at before. What I can do is in one spot get a sense of what's happening writ large, and then to get a sense of positioning. Now, I generally will just go down to the ticker explorer, and then I'll plug it in there so I can run through everything. And what I mean by everything is essentially all the tools in here I use to a degree. There's a couple that I don't care about. I actually have them turned off. I forgot where the little tool is. There's a tool that lets you customize what's on this. But there's a couple things that I don't really care about. But this gives you a look at some things that's really difficult to find other places. The historical data and stuff like that, I don't really care about. But this stuff is really useful. Understanding dealer positioning. So Gex, Charm, Vanna, that kind of stuff. So yeah, I mean, that's like a quick Cliff Notes version of just running through it at a high level. I also use this for stuff like sector flows. But the world of dealer positioning is really interesting because it can give you a lot of near-term insight on how things might move in the short term. So that's things like Gex, Charm, Vanna, and you can definitely trade dealer positioning if it's big enough based on those. And you literally can, it's one of the few things that like you can actually forecast pretty well because you can see it and you can see how it's changing. But it's difficult because it's not a static figure. What that means is, let's say that you have some sort of Gex level that looks really interesting to you, and it's not a closed system. So as dealers might be repositioning based on the current Gex levels, then there can be a bunch of new trades that come in for some other reason that then interface with the system differently. So I always throw that out because a lot of people, when they start learning about Gex, Charm, Vanna, really the impact at the ticker level, I think they start to think that like they're really latching onto something that has some real meat to it that you can pull a lot off of with, you know, in terms of just profit. But like you can make money off of it. But it's, again, it's like all this other stuff. I literally made a video earlier today talking about this. A lot of traders get into options trading thinking that if you trade options, you now have an edge. And it's not it literally is not the case at all. It's actually way more complex to develop an edge in options trading as compared to equities, but there are just more available to you. So that, click that in one level, it applies here. Like if you learn about the concepts of dealer positioning, Gex, again, Charm, Vanna, then you have some ideas, but knowing them, seeing them, and inherently doesn't yield some sort of edge, but you can monitor the behavior and then use that to derive at least some ideas. So yeah, it was just like a general overview of the tool. It's good. I like it. I like the guys a lot too. I talk with them every once in a while just to catch up, and I like them. So back to the COT report. We talked about this yesterday on the pro stream, but worth reiterating here for sure. The main thing I want to highlight is this green line. Large speculators, not fucking buying it. What I mean by that is this dip, as it's been dipping, large speculators have been offloading. And they, you can call them smarter, dumber, whatever you want, but they tend to be pretty decent with their overall positioning and timing as they're lightening their trades and whatnot. So the COT report's really good for that. I've actually done a couple sponsored videos for Bar Chart on their channel about the COT report. And I think this I wanted to validate because I was very curious how they would be viewing this. And when you start overlaying these different things that we talk about, you overlay the fact that VIX is still at 25, although the market is moderately rebounding. You overlay the fact that we saw a lot of negative leaning options activity in something like NVIDIA. You overlay the fact that we poke at the COT report and we see that speculators have actually become more net negative in equities like the E-mini futures, right? So like you start stacking those and it gives you, again, not with any degree of certainty, but gives you some ideas as to what might be going on in the broader market. And again, it's what I've already shared with you. It seems like the market continues to remain in a pretty volatile place, quite tenuous as far as I can see. And largely, it doesn't look like institutions are buying this recovery much at all, which leads into a lot actually about how I've been trading my positions, specifically the core allocation, the coverage triangle that I've been talking to you all about in SSO and TQQQ. So I'll throw a link to that in the chat for you to check out at your own leisure. But I've been making a ton of near-term adjustments, capitalizing on the price behavior as it sits. I'm actually starting to get a little itchy for specifically the TQQQ's position. And it's because it is like right on the cusp of being a really, really great position that I'll be able to turn into something awesome or something that's just going to collapse in front of me. And it's close. So I'll show you what I mean by that. I don't think I made any adjustments, but first let me grab the updated version of this for you here. This one I'm just going to relabel so I know what it is. And rename this one. Okay. So, oops, it didn't copy it. Yeah, it looks like essentially no change from what we talked about at last, but I'll show you what I'm talking about. Right now, in TQs, I have essentially two tranches of puts. I have some that are buried in at the 60s, and then I have some at the 52s. TQs right now is trading at 53.82. Now, this is overall amazing development. And again, that video that I shared, we'll talk more about it. I'm not going to sit here and talk to you about how great I am, as fun as that would be for everybody. But I want to talk mostly about just the positioning as it sits, because one of the things I talked about in that video, which I do echo, is I don't want to be 75% invested right now in this with the position as it is. If this was 75% invested with this 10 lot way further out of the money, then I'm cool with that, but it's not. And the way that I come up with how much I would like to be using at a given point in time, as you all know, is actually kind of complex. It's based on a multi-factor analysis, but to give you the main thing that I care about when I'm considering this is this here. What is the larger range that I've seen occur previously in terms of price? So we've seen price essentially go from here to here. And if we eyeball what that is, it's 83.5%, 82.5%, whatever you want to call it. But it's about a 83%, 84% move. So what that means is I also want to make sure that I'm tracking where that might manifest again, because if we take a look from 93 down to 20, That's only a 78.5% move. So that's insufficient. So then that means, what if we postulate TQQQ's down to 10? Well, now that's an 89% move. That becomes a better planning factor. So when I'm thinking about the planning factor for the moves and then the subsequent scaling I'm intending to use, right now I have essentially 75% of the position tied up in this just top region, which is a drop in the bucket in terms of this dropping all the way down to 10. Now, this goes into another conversation about this idea of units and using that to scale in. That's a whole other thing. But summarize all that up to say, a little too much out here right now. So this adjustment was fantastic, though. And the reason why this adjustment is fantastic is because it's the first time I was actually able to take some of these short puts out of being in the money, and there's a tranche now that is at least seeing some daylight. But I think that the move that we're having right now, again, is still not super strong. And seeing all of that broader negative positioning leads me to believe that it might not be in all too short order that my position might be underwater again, specifically the 52s. The 60s, those are good luck to them, right? Those are already, I write those off as some buried short puts, and, you know, c'est la vie, the waiting game has started on those. Joking aside, I'll still manage them, but broadly, there's not a whole lot I'm going to be able to, you know, jigger with them. Now, the ones that I have in 20 June, though, that are at the 52s, these are right on the dance floor. So the funny thing about this whole story is I'll show you how I figure out what I need these to trade at, but I essentially need them to trade real cheap. And I'll show you how. So what I'm doing is I'm adding up the total P&L, right? So it's 14,478 using the realized side of the equation. Then if I add these in, it's negative 49.48. So now we take that 49.48. We know that we essentially have 53.30 from here. So then what I can do is I can figure out the difference between these two numbers, figure out what essentially I need the option to trade at. So all I need to do is take this minus this, and it gives me $382. And we already know what the starting premium was, and we know how many contracts. The contracts is already normalized because we're using the total P&L, so I don't have to adjust by the contracts. So really all I need to do now is take this down by the total trade size. So I pretty much need this to be trading for like 38 cents in order for me to make the total amount of money that I need to pull out on these. So then to eyeball that, if I take these down for 0.38, that'll give me the 49.50 that I need here, which again, that's essentially how all of that will bubble out to being this a highly successful position. Now, that all being said, that doesn't necessarily mean that I won't adjust these. There's a good chance I will, but right now it's just way too early to even think about that. However, I do have to be kind of quick and not allow these to get buried if I can. So right now, that's why I'm a little itchy, because I'm exposed. And I'm exposed because these are a little too far out in time. Notice if I wanted to roll these, this is that idea that I talk about with respect to expiration liquidity. I'm in these 53 DTE. If I go out the next one, I'm literally doubling and change how much time is in the trade. So I run out of rolling choices if something happens during, again, this near-term window. So there's kind of a sit and wait and see what happens. I can roll them out to 19 set, but I wouldn't want to. If I have to, it's something I consider, but absolutely not something that I want to do. Now, let's talk about one other thing really quick. I have a couple other trades. We'll go through these a little more in detail tomorrow, but there's a couple broad market themes that I'm continuing to see play out that I do think are tradable. So one of those themes is reiterating from what we talked about yesterday. The relationship between comm services and tech is still not normalized. If you take a look, they're almost inversing in terms of how they're performing on the day relative to one another. I traded that today and it actually worked pretty well. It's just trading the expansion between the pairs relationship. Energy is on this really slow, steady grind. So there's a couple names in energy that have been performing, really leading the total pack here. And I will show you those. So if we get out of the COT report and let's take a look at this one. Let's go to energy. So if we take a look at the 5-day performance in energy, you can see really who the main leaders are in the broader index. And again, EQT, we have talked about EQT. It's got to be a dozen times now. So the reason why I'm mentioning that is because the market, it becomes not like super predictable, but like this isn't novel to me. The fact that EQT is up is not surprising at all. And if you'll recall, the trade that I talked about running in EQT was short puts. And it's simply because through earnings, it tends to have an inside move, but it's been bullish overall directionally. EQT has been very slow grinding to the upside. Now it's at a delicate spot here with it being at 51. It needs to break above this in order to see a resumption of this uptrend before I would expect it to roll back over. So the short puts that I have out that I essentially traded through earnings, I'm just holding those. And I had two different tranches. The specific earnings plays didn't play anything for that. And it's because EQT can move a bit much. I don't remember what our set analysis was on it. I actually might have traded EQT for earnings. I don't remember. I'd have to look at the log, but there was definitely a longer term trade component to it. And it's because it's providing a slight keel stabilizing force for the broader portfolio, which is really heavy in these other names. And there's another trade that I'm doing that with, two of them actually. I'll give you one of them. Where are you at? Here. So Newmont. This is another one. Now, Newmont has been a little bit of a favor simply because of the risk off environment that we keep rotating in and out of. Now it's starting to slow down, so this might actually be ready to come down. I had some long calls and short puts in these. So sort of a synthetic long scenario, but I treat them slightly differently. And the long calls are like a small loss at this point. The short puts are still fine. So these might have to come down if it continues this broader trend. But this is, again, adding this to the portfolio because it's the kind of name that's doing something on its own, meaning it's providing some bullish price movement, but also because of the way that it fits into the portfolio. So the portfolio itself is still long beta weighted deltas broadly. So that's broadly what I got for you guys. Now's a great time. If there's anything you want to take a look at together, if you have any questions or anything like that that you want to discuss, let me know. I'm going to pop the door for Thor real quick, and then I'll hit whatever you want. He's thinking it's his dinner time, but Mel's not here and I'm not going to feed him just yet. So he'll be back in a jiffy, I presume. Lauren says Pelosi got trolled today. I didn't see that. What happened? What happened to Pelosi? Let's see. I saw that Trump said that he would be cool with banning trading for them. Let's see. Oh my God. I see the troll now. The Pelosi Act. That's so... Bro. That's classic. It's absolutely classic. Yeah, this is good. This needs to happen. The fact that there's individual Senate, Congress, whatever, like any of those entities should not be allowed to trade individual names. They're way too close to way too much information that is absolutely not accessible otherwise. And I also think it's tricky, right? We've talked about this before. The people that don't have money, they look at this with disgust, contempt, and then they get upset at them. And I understand that perspective because there was a point where I had no money. Now with money, my perspective has changed. I still think they shouldn't be allowed to trade individual names because it sets a terrible precedent and it sets an absolutely abysmal baseline for how the general population views them. However, there is a reality. You have to look at things also from their lens. If one of the reasons why I'm so disinterested in getting involved in just public service is because how much it skylines you, how gritty it is, and how awful the compensation is. You make no money. So the fact that we look at people like this and we just look at them and we're upset. We're like, oh, they shouldn't be able to do this. This is bullshit. They shouldn't have this much money. But then there's the other side of it as, well, I don't want fucking stupid people working in these jobs either. And regardless of whether you like Pelosi, don't like Pelosi, or these other people, like they're still intelligent. So in order to get intelligent people into these kinds of jobs, you also have to think, well, what's in it for them? Which is really, really difficult. Now, again, this is why I don't think a ban on investing at all should be allowed, because otherwise it just defeats, I think, a lot of the people that otherwise might be interested in these kinds of jobs. But I think being able to trade individual names is fucking crazy. And it's because they're way too close to stuff that they would hear that might be public, but they're still going to hear it well before other people will. So, yeah. Now, one other thing that is worth noting whenever we talk about Pelosi is not the one that's actually trading. Her husband is a professional investor, and he's done that his whole life. So there is also that dynamic here where, although we really like to make the joke from the angle of, oh, it's Pelosi trading, it's really not. It's her husband who's already a professional investor. So there's also that lens. But yeah, this I think is hilarious. Let's see. Reintroduce Pelosi Act to ban lawmakers and spouses from trading individual names. Named after Nancy Pelosi, the bill has gained support from both parties, including Trump, Jeffries, amid ongoing scrutiny of congressional stock trading. Yeah. I mean, honestly, I don't like the name. Oh my God. I did not realize this. Look at this. Preventing elected leaders from owning securities and investments. They literally, I didn't know that they made it a fucking acronym. That is a epic level troll. That's so funny. Man, I was going to say, I actually don't love the name Pelosi because I think it's kind of ridiculous to just single her out. I think there's a lot of other people that are doing this. She just started getting a lot of press because of her level within government. So I don't like it making it out where it's like a Pelosi problem. Like, this is much broader than just Pelosi. But the troll in that acronym is S tier. So I don't even know how you could be upset at that. It's so funny. Would prohibit lawmakers and spouses from holding, buying, or selling individual stocks while in office. Would allow investments in mutual funds, ETFs, or bonds. Yeah, I think that's okay. They would have up to 180 days to divest. That kind of sucks, to be honest. I don't hate it, but there is just the timing component of when they happen to get in. So I don't love that. But I think, that's fine. Look at the violation, though. The violation, well, maybe they're thinking of it as not so much the violation enforcement via the fines. Maybe they're looking at more so as like violation enforcement via like the press and then the difficulty getting reelected, maybe. I'm wondering if that's the broader angle that they're taking here, because I mean 10% of each unlawful transaction and forfeit profits to the treasury. I guess if they have to forfeit all profits, but I don't know, it just doesn't seem like that punitive. I guess maybe if they have to forfeit all profits. I kind of misread over that one. I like that a little better. Still don't love it, but to me, it should be the kind of thing where, like, if you choose to do this, you literally should be kicked out. Like, you shouldn't be allowed to continue serving. Like, you literally should have to go away. And the reason why I think that is it sets such a miserable precedent, and the optics on it are abysmal. They're really as bad as the optics could get. So because of that, I think it is completely worth just essentially saying like, nah, man, you guys, not happening. I would advocate for that. Moody Blue says thoughts on AMD earnings next week. Let's see. It's a little early for me really to have an opinion on AMD earnings, but we can take a look. The 6 after the market. Do I still not have the earnings? I still don't have the earnings tab. I'm going to move you guys over to this screen really quick. And I'm actually going to close this thing down, open it back up. I want to see if I can get the earnings tab back. My fucking earnings tab is gone. Guys, this is a travesty. I don't know what I did to deserve this, but I don't feel like I did it. All right, let's see. Okay, it's back. That is so bizarre. That's so bizarre. All right, let's take a look at this thing. Move you guys back over here. I'm just making sure all my gets cleared out. Yeah, we good. All right, cool. AMD. I mean, short puts looks like a fucking bold move, dog. Gap down, up then down like a day later, gap down, up day. Gap up, but then close down heavy, gap down. AMD. I mean, for me, I don't think I would trade this to the upside. Might trade it from a vol lens, but even that, my guess is there's going to be better choices than this for me. So even from a vol lens, probably not realistically. Interesting though. Super interesting. But yeah, it's too early to tell. The reason why I say that is we have to wait until we actually get closer to earnings itself, and then we'll see what the market is pricing it at. It's just way too early to tell if it's even viable or not. Mateo says, was my comment deleted about bid spoofing Burke B at 940 on the 560 contracts? Trying to understand how these guys push retailers into their exit liquidity and why they do it. Those are different things. Bid spoofing and then essentially trying to manufacture exit liquidity. Like those are actually kind of really big different concepts. What leads you to believe that it was just not even bid spoofing? It doesn't matter which side, but what leads you to believe that it was spoofing that was going on? Check the option chain. That post. Well, I don't see a post. Oh, do you mean like in the Discord? Let me look in the Discord. You said it was at 940. Yeah, no, I don't see it. Unless you posted it in a different room. Yeah, I don't see anything in here about Burke. I don't know why it would have been deleted though. The bot might not have done it. But yeah, anyways, I would decouple, especially from like the retail trader lens, because spoofing is really a game between other firms, other high frequency trading firms, typically. Not relegated to them, but it's very frequently between other HFTs and market making firms. So I think the connection of pushing retailers into the exit liquidity is not necessarily applicable. Why they do it in general, I think you're answering your own question in terms of getting some sort of liquidity. Check this option chain 5-2 Burke B 560 call. It's very weird at 940. What are we going to check though? There's nothing I'll be able to see here that will be able to confirm or deny whether or not there was spoofing. Maybe I can check it in here. Burke B 560 call 5-2. Let's see. I haven't really used this much. Yeah, I mean, there's nothing here that lets me actually see that. Now, Mateo, what otherwise are you talking about me checking? I'm trying to think like the way that you're thinking that you detected spoofing. Because from a retail trader lens, there's only a couple things that we could potentially do. But I'm wondering how you're thinking about it. Nada? Okay. Well, anyways, I'll continue on. We can talk about it in two different lenses. The first lens is the concept of spoofing, but then the second being some sort of behavior in Burke B. I think the behavior in Berk B doesn't. Let's look at Berk B broadly first before I say that. Okay. I mean, net premiums really weren't that much. Calls ran fairly negative, but not like tremendously. Put side was pretty mellow. The 3 days that you're talking about seem to have had some activity. Same thing with the 540s. I wonder if one of those was sold for a spread. No, because it's 13K against 1800. So people wanted these for sure. Seems like he is pushing his followers into his own exit liquidity. You might have a closed group who load up buys before they share the play. You talking about this in Berkshire? Who are we talking about? When you say pushing his followers, who's his? I'm not sure. Because that is completely different. That starts to sound more like pump and dump. But I mean, to do any sort of pump and dump in something like Berkshire is fucking crazy. Because the kind of scale that you would need. And I would also then completely decouple that from spoofing. It seems like you might be confusing what that is compared to the other thing you're talking about here. Spoofing is layering orders in an order book to provide false appearance and manipulate the appearance of supply and demand functionality in the markets, which is why, like, using anything like this, we can't see it. Because the way that you would monitor spoofing is two different ways. If you go to enter an order and then it moves before you get a fill, and then you enter an order and then it moves. Like, those are orders that are completely designed to be pulled before they're filled, which is annoying. And you'll run into that even as an options trader, retail options trader. It's not always spoofing, but sometimes there's just a stale order that's sitting there that when it goes to get hit, it'll move. Mateo says it's a Twitter handle that's doing it. Let's go see. I've never heard of this person. Dude, it's 77,000 followers. There's no way that they're doing this. Yeah, I think you're confusing a bunch of things. So the first thing is that person is way too small to even attempt a pump and dump on something like Berkshire Hathaway. Berkshire Hathaway is huge. In order to run a successful pump and dump, you really have to be able to control way more of the volume, because that's essentially how you create your own wave to get out. When you're trading really big names like that, it's next to impossible because there's so many other entities trading at such larger sizes than any one individual that, I mean, take a look at this, right? Call premium and put premium. Today it traded $9.6 million of put premium, $21.5 million of call premium. That's literally just today. So even if you have a massive bankroll of hundreds of millions of dollars, in order to be able to reliably do this and control the float anyway like that, I mean, it would have to be at like gargantuan scale. So that is like the mechanics of something like a pump and dump. There was no volume on the 560. Seems like they ran the price up of out of the money contracts with their closed group. Who gives a shit? So let's take a look at those 560s. I don't know what they did with the 560s. I don't know anything about this group. So just to be super clear. But if we take a look at, let's take a look at the 560s only. And we said it was for the second. I mean, they literally don't even register here. These for $4,000. I mean, there's nothing happening here. This is such a small contract in such a small amount of volume that their exit liquidity is not going to be provided. You're confusing the way that options are traded. You're, I think, thinking too much about how a small float stock might be traded. But the counterparty for essentially all of their trades is going to be a market maker. It's not going to be directly paired, retail trader, the group, whoever they are. The group is needing to exit their calls. So then they need somebody to buy them from them as they sell them. That's clearly not what's going on here. The other case is they're obviously buying. So while they're going through that buying activity, you need somebody to sell them to you. The probability of retail traders sitting there resting orders to sell these calls to this other group is probably very little. So the broader thing is, I think you're confusing a few different things. I think you're confusing spoofing. I think you're confusing pump and dumps, how they work. I think you're detecting a broader thing that seems off to you, which is completely fair. I don't know anything about them. I just think you're confusing the mechanisms by which it would be executed in. Now, for pump and dumps, though, like I said, you'll typically see them done in much smaller names. And it's simply because of the realities of trying to run that kind of scheme. But for the options market, the other side of these trades is a market maker. And the market maker is happy to be on the other side of the trade for these guys. Because if they're buying these 560 calls using $4,000, one, it's a tiny position. And two, let's take a look at the 560s in Berkby. Yeah, they're trading for 23 cents. So the average fill, let's see. Where's price? Nice spot. I think it's this one that they use. But bid ask volume OI. I don't really care. So it looks like what they grabbed him for 22 cents, trading for the same right now, right? Like there's, I don't see it. I don't see anything there that leads me to believe that these are being used to try to manipulate some sort of price movement. If it is, it's not working well at all. Because the total, again, the size of this was a 170 lot. Look at the minute chart. Okay. You mean minute on the option or on the stock itself? Berkby. You will see it so clear on the option contract at 940. There's nothing to you again. I think that you're still confusing. Like, just because there's a spike in volume doesn't mean anything. This happens all the time in all different kinds of names. So I think, like, I can see what you're talking about, that there's a massive spike in volume here, but this happens in all kinds of names. A great example of that is if I go into one of my scans here, this one, and let's just take a look at cores, because cores literally had an option with 200,000 expansion in volume over OI. So let's take a look at cores. And which contract was it? The 7 puts, 19Ds, 7 puts, 19Ds, this here. Right? So there's no activity essentially all day. And then at one point in time, there now is a 10,000 lot that clears for $1.38 million. The overall volume on the day was 10,002. So what I'm showing you is you might be suspecting some sort of nefarious behavior, and that I can't comment on. I don't know. But from what you're seeing here, it literally doesn't show you anything related to that, because this is how options trade. So there's nothing to see so clear at 9:40 a.m. Eastern time, because the only thing that you see at 9:40 a.m. is a spike in the chart. So you sent pictures on Discord. Let's see. Yeah, that's exactly what I'm saying, is that there's really nothing to see there. There's just an expansion in volume. Again, it's literally the same exact thing that I'm showing you here, right? This is even a much larger magnitude version of what you just showed me. And again, I can show you hundreds of these, because again, this is how options trade. Anytime you look for volume over OI, that is where the volume on that day, for some reason, explodes in a specific contract. It doesn't have to explode. It could be a little bit, but typically the scenarios we're talking about is more severe than that. And it's for a trade being built for one reason or another. Again, like this is a prime time example where this trade here shows you cores ended up having 10,000 contract volume on this one specific time frame, 1241 to 1242. So it's really, to me, I think it's a little more telling when there's got to be other behaviors. The only thing you're detecting is a spike in volume. That's all that means. So what the spike in volume means, where it comes from, all that kind of stuff, it's a completely different thing. But if you take a look at the candle volume on this one, it's literally 2,400 contracts. It's tiny, actually, compared to what you see here. This is 2,400 contract spike. Again, this is 10,000 spike. So all you're seeing is a spike in volume. You can't really pull more from that without more information. And just to remind everybody, the concept of spoofing is very different as well. Spoofing is done at the institutional level, and it's like mixed with like order stuffing and things like this to manipulate the appearance of supply and demand functions in the market. So, Mateo, you're probably just picking up on like sus behavior general based on the person that you're talking about. And it could be valid, invalid, but you just can't prove anything from that thing there specifically. There's really not much to see. That being said, you should always follow your gut, right? Like I don't really follow anybody like that, so I don't know anything about them. But that's generally what I'm seeing there, is just a whole bunch of not much. All right, gang. That, Mateo says, seems like a pump and dump. Yeah, I don't see that. I don't think you could call it even a pump and dump, because again, the position that was built is still held right now. You're not going to be able to run a pump and dump in that, because it's an option. And again, the counterparty to his trade is going to be a market maker. Yeah, like that's such an important concept to understand. And the other thing is, the value of those contracts is not going to be determined by their buying and selling behavior. One, because it's tiny. Their buying and selling behavior is secondary largely to the movement of the underlying. So the concept, again, of a pump and dump is to be able to control the underlying, because that's how then you buy shares cheaper and your buying volume is great enough that it starts showing the appearance of broader interest in this underlying, whatever that is. And then you start selling into the follow-on entry volume. This is for a small float stock. In a big name like Berkshire Hathaway, their buying literally doesn't matter, because the underlying is still going to be the dominant force. Now, sometimes the tail can wag the dog, meaning if there's enough options activity, like I was talking about earlier in the stream, it can necessitate certain dealer behavior in terms of hedging activities. But even that, it requires such an insane scale, especially in something like Berkshire Hathaway. Again, like the total premium that we looked at in this options chain, in this specific one that we're talking about in Berk B, the total premium is $413,000. The total premium that traded today in Berkshire Hathaway, the total premium is over $30 million. This is nothing. And that $30 million itself still won't move the underlying itself, which if we take a look at what the volume weighted average was here, it's 4.2 million shares. So 4,238,653 times the current price of 530.94. So the total amount of money that traded today in Berkshire Hathaway is $2.25 billion. So the entire options activity today is completely inconsequential. So Mateo says, I saw the contract spike from 10 to 41 without the underlying going up. That's different. What you saw was the contract moving largely due to supply and demand changes, but then also liquidity changes. So the value of that contract, the only reason why it would move between 10 and 41 would be as if there's really false orders resting there that aren't trading, right? So you can see that it didn't actually trade at 10 cents. It was rested at 10 cents, but that's not where people were actually trading at. Then you can see when that volume spikes here, the volume spikes. I wish there was a way to make this one chart a little bigger. I feel like there's got to be a way to do that. That's okay. So you can see the volume, right? The average fill is this yellow line. The average fill that happened today was here in the mid 20s. The cheapest fill that it got on the day was, it looks like a one lot. I can't even hover on it. 12 cents on an 8 lot. So the reason why you see that volume or the average, the price going up is because that's the market maker looking at the order flow that's coming in, and they're charging them a premium. Because what's happening is the market maker doesn't want to be stuck on one side of the order flow. So they continue to adjust their books. They move the bid and the ask, and they change what kind of depth they order, sizing. So they make it more expensive to continue buying. That's not the price going up. That's not the value of the contracts going up. Again, you can see what the overall value of the contracts ultimately terminated around, which is where it essentially started the day at. The 20 handle, 20 cents, 23 cents, something like that. So this is the market makers just increasing how much money they're forcing the follow-on trades to be executed at. But all of these, again, there's no big effect because in terms of the impact to the underlying, but then also the impact to the individual traders because the counterparty to these is going to be a market maker. So Teo says they got exposed. Look at Discord. Sure. Let's see. So this is a small account that misunderstands options. That's not them getting caught. Yeah, it's a small account that misunderstands options. That's all. So again, not saying that there's no nefarious behavior going on. I don't know them, but all I'm saying is you really can't detect it from this. And from inside of this, let's say, for example, other retail traders started buying the position for whatever reason. They're not providing the exit liquidity for them. The market makers would be providing the exit liquidity for them. So yeah, it is what it is. But anyways, about time for me to wrap up. Fun conversation, though, about like analyzing an order and then actually talking about order flow, spoofing. I think those are good concepts to be aware of. So even though they didn't directly apply here, still happy to chat about them. As always, if you need anything, let me know. Be an outlier. See you later.